couple of things that I would think about. One, for that situation, it really depends on what you think you might want to commit to. So different carriers serve different purposes. If you said, I'd like to put in a lot of money into a policy each year, like let's say 50,000 a year, that's a large portion of your income, the way it currently sits. But looking out a few years, maybe you're thinking that'll be easy in 2 years, no problem down the road. And you kind of want to build for that, right? You're going to build for the future. So at 50,000, there isn't any carriers that will approve you for putting 50,000 in, because it's too big of a percentage of your income. But there is a carrier that's very flexible. We could set it up to where you have like $5,000 base premium, but you could dump in up to the 50,000 anytime you want throughout the rest of the year, or even the next year if you need to catch up, like if you're not able to at all. That's Guardian. Guardian gives us the most flexibility of any of the carriers out there in whole life. Okay. The way that it's designed, it would be designed like my policy is $5,000 base. I put in 50,000 a year, and I do that whenever I want. I just have $500 a month that comes out automatically, and that ends up adding up to 6,000, which is 5,000 on my base premium and 1,000 that goes to a paid up additions rider. By paying that, it keeps my paid up additions rider around. As long as I have that paid up additions rider, I can add in unscheduled paid up additions whenever I want. And that's what I do. I max it out all the way to the top. And I do that by borrowing. Like I'll put in a chunk of money and then I'll pull out what I can and then I'll put it right back in.
And then for the rest of the year,
I can focus on paying down the loans if I want to. That's how I get to this big MEC limit. That's how I make that MEC limit in Guardian. I never have $50,000 just sitting on the side that I can just dump in, because I always have my money out working. Yeah. So that's one option. Another option is carrier like Penn Mutual, where they want to know exactly what you're putting in. So that's why there's no way they would approve you for 50. They might approve you for 25, but now you're going to have that 25 on a set time period. You could set it up monthly and it would be like $2,200 a month. That would be your regular bill that they would be expecting. They do have some catch-up provisions, but it's complicated. Penn Mutual and MassMutual both, like, it's not as easy to catch up. You only have like your policy anniversary date. You can catch up, but it's only a certain amount and it might change if you don't fund it for a few years. So like it gets complicated. With Guardian, not complicated at all. So the way that I break it down is, if we want the flexibility, we go with Guardian. If we don't need the flexibility, we just have that set amount and we know we're going to put in, we can go with one of the other two. And the other two will have higher cash growth and a bigger death benefit. With Guardian, we're able to put a whole bunch more money in. So in the long run, it ends up being better, especially because down the road, once you get over 65,000, but really over 100,000 in your policy, with whole life policies, you can go to an outside bank and get that collateralized and have it as a line of credit. And if you're doing it for business purposes, that line of credit doesn't show up on your personal credit, and you get to use it just like a line of credit. Getting money in and out of it, instant. When it comes to your life insurance policy and doing infinite banking with your actual policy, getting money in and out can be slower. Takes a couple of days to get it in, takes a couple of days to get it out. If you just deposited money in, it's got to clear. It's going to need 10 days to clear before you can start to get it out. So there's some time delay there. So I really like lines of credit, especially if you've seen on my channel anything about dynamic banking. Check out my dynamic banking videos. Everybody should do dynamic banking. There's no cost to it. The philosophy of how you move your money to maximize your cash flow. And we're always trying to take advantage of every dollar that comes into our hands towards offsetting interest while we hold on to it before we go pay the bills with those same dollars. Okay, so all the dollars are doing multiple jobs. And when we combine that and infinite banking, now it's a beautiful thing. But by being able to collateralize that loan, the life insurance policy value with that line of credit outside, we end up with a good opportunity for arbitrage. The loan, so I just got one of mine. I got a $265,000 line of credit, 3.25% interest. That's killer.
Because my dividends
on my Guardian policy are 5.65%. I'm building in that space. And like when I started my policies out, I was very aggressive in funding them, but I borrow out all of that money and I recycle it. And I use this policy to fund that policy. And so like my play is I'm going to do that for 7 to 10 years. And then I'm going to focus on paying back any loans that I have. I'm going to borrow heavily at the beginning and then hopefully less and less each year. But now that I've got access to that line of credit, now even if I have to borrow everything out, I still have a spread that I'm earning in there. So it's awesome. And it's a line of credit, which I love lines of credit. You know, being able to move that money instantly is key.
Hope you found value in today's video. If you'd like to find out more about IUL and the whole life, check out these videos right over here, and we'll see you next time. Now go maximize your cash flow.